Did you know that according to the IMF, over $600 billion in taxes are avoided every year through tax havens? That's more than the annual GDP of many countries combined. So here's the big question. How do billionaires legally reduce their taxes, while most of us pay every penny? In this video, we're uncovering the secret world of tax havens, offshore accounts, and clever legal loopholes that help the super rich protect their wealth. Stay with me till the end, because I'll also reveal a simple framework that will help you understand what's legal, what's shady, and what could impact your money in the future. Narrator, tax is something we all deal with, whether it's your paycheck deductions, sales tax, or corporate taxes. But when it comes to billionaires, the game changes completely. Imagine this. You earn $50,000 a year and pay maybe 20% in tax. A billionaire earns $500 million, but pays less than 5%. Shocking, right? By the end of this video, you'll understand how tax havens actually work, the most common legal strategies billionaires use, and what global governments are doing to stop, or sometimes encourage it. Narrator, let's take a step back. Tax havens are countries or territories where taxes are extremely low, sometimes as little as 0%. Places like the Cayman Islands, Bermuda, Luxembourg, and even within the U.S. states like Delaware and Nevada, act as magnets for corporate money. Small Blue Diamond in 2021, a report estimated that 40% of multinational profits are shifted to tax havens each year. Small Blue Diamond famous scandals like the Panama Papers and Paradise Papers revealed just how widespread this practice is. But here's the twist. While some of it is illegal, much of it is completely legal, thanks to complex international tax laws and loopholes written into the system. And that's why this isn't just a billionaire problem. It's a global financial architecture problem. Narrator, let's start with the first big strategy, offshore companies. Billionaires often set up companies in countries with little or no tax. Instead of paying corporate tax at 30% in their home country, they shift profits to a shell company in, say, the British Virgin Islands, where tax is near zero. Case study, Apple. For years, Apple legally saved billions by routing international profits through Ireland, a country with famously low corporate tax. To compare, it's like living in a high-rent city but registering your home lease in a small town where rent is dirt cheap, even though you spend all your time in the city. It's all about location of profits, not location of people. Narrator, the second strategy is trusts and foundations. Billionaires don't just keep money in their name. Instead, they move it into trusts, which can technically separate the individual from their wealth. Example, the Walton family, heirs to Walmart, reportedly used trusts to reduce estate and inheritance taxes, legally saving billions across generations. And you might be asking, wait, is that fair? Well, here's the catch. The law says if the money is in a trust, it's not yours anymore, even if you still control it. This is where law and morality blur. Billionaires aren't breaking rules. They're just playing the rules better than anyone else. Narrator, third, let's talk about tax residency and citizenship. Some billionaires go as far as changing their citizenship or residency to countries with lower taxes. Example, billionaire tech investor Eduardo Saverin, one of Facebook's co-founders, renounced his U.S. citizenship before the company's IPO. By doing this, he legally avoided an estimated $700 million in U.S. taxes. Pros? They save billions. Cons? They often face backlash from the public and governments accusing them of being unpatriotic. Think of it like moving from one neighborhood to another just to avoid higher rent. Except instead of rent, it's taxes in the billions. Narrator, so what's next? By 2025 and beyond, we're seeing a global crackdown on tax havens. Organizations like the OECD are pushing for a 15% global minimum tax to prevent companies from shifting profits unfairly. But here's the risk. If governments tighten rules too much, billionaires may just innovate new loopholes. That's why some experts say tax havens will never fully disappear. High voltage, what if tomorrow AI-driven tax strategies make it even harder to track money? High voltage, what if crypto and digital assets become the new tax haven? Opportunities exist for investors and governments, but so do risks of even more hidden wealth moving underground. Narrator. So let's wrap this up. We've seen how billionaires legally reduce taxes using offshore companies, trusts, and even by moving their citizenship. These strategies may be legal, but they raise big ethical questions about fairness in the global economy. Here's the key takeaway. The rich don't avoid taxes because they're smarter. They avoid them because they have access to better rules. If you want more videos breaking down complex finance topics in simple, clear language, then make sure to like this video, subscribe to the channel, and share your thoughts in the comments. Because at the end of the day, understanding money is the first step to mastering it.